Good morning, everyone, and welcome to the last of our videos for 2013. The end of the year is usually a placid time for markets, but this year there have been some dramatic moves right down to the end. The range for the year in dollar stocky was 9.4%, but just yesterday the range was 2%, or 21% of the entire year's range. Similarly with the Norwegian krone and the New Zealand dollar, both of which did about 10% of the year's range in one day yesterday. In Sweden's case, the movement was clearly related to the news flow, higher than expected Swedish retail sales in November. But the sharp moves in other currencies suggest that something more widespread is afoot. True, yesterday's U.S. pending home sales figure was somewhat disappointing, but overall the U.S. economic indicators remain not only broadly positive, but far more surprisingly positive than in most other countries. And that's what usually counts, the surprise. Also, the implied rates on Fed funds futures have come down slightly. They peaked last Thursday and are down 5 to 6 basis points from then in the 2016 region. But this is still substantially higher, 17 to 27 basis points higher than before the FOMC meeting on the 18th of December. Yet the dollar is quite mixed since then, up against 4 of its G10 counterparts and down against 4, while unchanged versus the Australian dollar. So why is the announcement of tapering, the better-than-expected U.S. economic indicators, and the sharp upward revisions to Fed funds expectations failed to boost the dollar? I can only surmise that it's end-of-year distortions. Over the last 5 years, the dollar has on average weakened in December against the euro, the Swiss franc, the New Zealand dollar, and the Australian dollar, but it gained against the pound, the yen, and the Canadian dollar. It seems likely to me that there are some seasonal factors at play here that may well be unwound in the new year, particularly after European banks finish repatriating their funds in preparations for next year's asset quality review. I look for the dollar to resume its upward climb in the new year. Now, a quiet New Year's Eve is expected today since the calendar is light once again. There are no releases coming out from Europe, only from the U.S., where in the U.S. the S&P Case-Shiller Home Price Index is expected to rise at about the same pace in October as it did in September. The Chicago Purchasing Managers Index for December is forecast to fall, but that's likely to be offset by a rise in the Conference Board Consumer Confidence Index for the same month. All told, however, I'd expect to see position squaring dominate the market. So after a few down days for the dollar, we could see some dollar buying back ahead of the close of the new year. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX, wishing you solid trading and a happy new year.